Hello, everyone, and welcome to today's Insightful Accountant webinar. Insightful Accountant is an online news and information source written for small business advisors interested in the latest news and offerings in accounting technology. Today, we have Matthew Fulton and Mason Power presenting how workers' comp impacts small business amidst COVID-19. My name is Emily Hedrick, and I will be your webinar host. After the session today, everyone will receive a copy of the presentation and the webinar recording. If you have any questions during the webinar, please enter them in the Q&A box, and we'll try to address them during the webinar. If we don't get to them today, they'll be given to Matthew and Mason, and they will follow up. Today's speakers, we have Matthew Fulton, who is the co-founder and CTO of Parkway Business Solutions, where he uses his passion for technology to create time-saving tools for accountants and bookkeeping solutions to fit the needs of the modern small business owner. As the co-creator of QB Community Live, Matthew dedicates time helping his fellow community members dedicated to the belief that together we all succeed. When he's not working, you'll likely find Matthew walking his dogs on the beach in Ventura, California, where it's always another beautiful day in paradise. You can connect with Matthew on Facebook or Twitter at Parkway Inc. and subscribe on YouTube at youtube.com/ParkwayInc. Mason Power is the Director of Product Strategy for AP Intego. AP Intego is a tech-enabled insurance agency with over 50,000 small business clients sourced through hundreds of partnerships, growing over 30% each year and expanding further into other lines of business beyond pay-as-you-go workers' compensation. He works with insurance carriers to tailor solutions and the online user experience to the needs of the small business. Thank you both for being here with us today, and when you're ready, you can get started.
Awesome. Thank you so much. I appreciate you having us both on today. Let me get started here by sharing our presentation. Mason, how are you doing today? Doing great?
I'm doing great, Matthew. Not as sunny here as it is there, but
you know,
I'm
that's
in
been
New
true.
York.
We're kind of lucky that way. Well, today's webinar is going to be focused, as we talked about, it's really focused around the idea of workers' compensation and what small business owners can do amidst COVID-19 to help improve cash flow. So we're going to go through a couple details first, some interesting information about the CARES Act as to basically who's been funded. We're going to talk a little bit about, first responders, frontline workers, because that'll play into a lot of the state legislature. And then we're going to go through an example of basically a workers' comp quote and what the different type of billing cycles would look like with a made-up example, basically. And then finally, what we will do is we'll show you how you can make a request for a broker of record change to see about possibly changing your workers' comp policy over to being with AP Intego and QuickBooks Online. Now, we love having a very interactive group, so please feel free to ask questions throughout the entire thing. Matter of fact, to get started, we'd love to hear where everybody's chiming in from. So in the chat area, please just let us know where you're hailing from. And if you have questions along the way, be sure to ask them. We will leave time at the end also to answer additional questions. It's really important. I'll go through this pretty quickly because Emily already did a wonderful job doing an introduction. So everybody by now knows I'm Matthew Fulton with Parkway Business Solutions, and grateful to be here today to help share some information. Mason, how about you?
It's awesome to see everyone coming in from all over the country, Pennsylvania, Maryland. We are a growing business, and thank you for the introduction. Even in today's market, we are writing new business, and that's entirely due to our partnerships. We have almost 400 partnerships in total. Intuit is the largest for us, and we embed an insurance ecosystem right in there. 90% of our book is comp, pay-go comp, a lot of GL outside of it. And what's great for the customer is as Matthew will take us through, is the immediate reaction of pay-as-you-go comp. A little challenging for those of us who make a living off of the premium, but we're in very good shape and we're growing, and we appreciate you guys joining today.
So we should probably start off with the normal legalese. So let me try to get through this real quick here. The content and materials are intended only to assist you in your general organization and decision-making for your business or practice. Accordingly, before making any final decisions or implementing any accounting, financial, business, or other strategy, you should consider obtaining additional information and advice from professional accounting, legal, or other advisors who are fully aware of your circumstances. Intuit disclaims all warranties as to the accuracy, completeness, or adequacy of such information. Enough of that. So first off, the CARES Act. Obviously, it's been what everybody's been talking about for quite some time, but who got funded is the interesting thing so far. Now, this is right before the information for round 2 came out, so this has changed a little bit, but actually out of the first round, the construction industry was the #1 industry that received money from the CARES Act, $44.9 billion, and over 177,000 loans specifically were approved. Professional, scientific, and tech services, those were the next ones basically. So this had 208,000 loans approved for 43.3 billion in funding. So rounding out the rest of the top 10, the other 8, I thought this would be important to show because the way I saw this is if we looked at the approved loans, what that's really showing me is that's the number of businesses that made applications. So that's the number of businesses out there that have employees out there that have workers' comp policies. So you can see healthcare, obviously food services, very, very high up there, retail, of course, as well. Now, we're also going to talk a little bit today about some of the language that comes from state to state, and a lot of the specific legislature talks about first responders and frontline workers. So to make sure we're all on the same page with that, of course, your first responders would be your health and safety, like your police, firefighters, hospital, pharmacy, caregivers, so forth. Workers actually in food shelters, medical billing, even mortuary services. But the frontline workers, now these are ones I really wanted to focus on, thinking again more towards the small business environment, even mid-market. It's going to be the grocery stores. It's going to be all of the restaurant carry-out food. It's going to be your gas stations, your truck stops. It's going to be automotive repair, postal and shipping. It's financial services. So accountants, insurance companies, staffing, your plumbers, electricians, waste management, cable providers. So all these frontline workers, there's a even larger list, but it's important to understand the distinction between them because there's certain legislature that varies state by state that will help, has to do with how they would be covered in regards to a COVID claim. Now, Mason, I know for state legislature, this is an area that you're extremely familiar with, some of the stuff that's been coming up, right?
Yeah, I mean, when you look at, you mentioned claims, Sarah pointed out she's from California, maybe we'll start there. There's been a lot of lawsuits and a lot of legislation to try to make sure that small business is covered for a COVID claim. And focusing on the legislation, a number of states have issued draft legislation saying that frontline workers should be presumed to have gotten COVID at work. And really there's nobody in the first responder bucket, nobody refutes that, even though it's not part of the workers' comp contract. Nobody, including the insurance industry, is disputing that those guys should be covered. If they get COVID, they should be covered. And so the industry is reacting, and there's a few claims. It's not a lot of them. A lot of the claims have been in events, travel insurance, other lines of business. Obviously, business interruption has been a big thing in the news. We really don't expect that will be retroactively forced on the industry. And so just kind of setting that aside, that's a property coverage. When you look at workers' comp, there's a really wide range of claims. And back to California, their definition of essential worker is really broad. And it was like 16 different groupings of industry, And that was what came out in March when they shut down. If they have legislation pending that says if all of those people are presumed to have gotten COVID through work, it's about 35% of the workforce, small companies, large, highly focused, self-insured companies. The estimates range from the rating board from 2 to 30 billion, with the midpoint really being around 11 billion actually per year in claims. So if legislation like that actually got passed, then it could become a significant claims event in workers' comp. Otherwise, it probably will not be, and it will be a claims event in other industries. However, on the other hand, you heard AIG come out this week and say that COVID will be the biggest CAT event in the history of insurance. So it's a fluid situation in terms of where legislation is going to be. But I think we should probably focus in on oh yeah, you're on that slide. If we focus in on the things that employers can do to save some money because they've been shut down,
yeah.
They're having to work from home, and they are running payroll, but they want to pay less per employee because their perceived risk for the employee is lower. And in fact, it is. And the insurance industry and state boards have reacted very quickly on this. So among the lowest rate is the clerical office workers. So, if you're working at a restaurant, but you're not out on the floor, you're not working in the kitchen, you're doing the paperwork, you have the lowest workers' comp rate as opposed to people in the kitchen, let's say. Now, all of a sudden you're shut down. If some of those employees are no longer doing what they do, they're working from home, they're answering the phone, setting up delivery, or doing something totally different, and they want to pay less for their workers' comp while remaining covered, that's what this employee classification 8810 is. We're getting a lot of questions about these. This has been, now that sort of PPP is behind us, the first round of applications, this is what we get questions on. Our book is 63,000, so we did 26,000 tickets in the first quarter alone. So when I say we get a lot of questions, it's a lot, and this is what the bulk of them are now. The bottom one, 0012, is basically, I have an employee who is on leave because the CARES Act provides a lot of leave, COVID sick leaves. I'm sick, somebody in my house is sick, and I need to care for them. I get the benefit of the leave, paid leave, and the employer gets to assign me to 0012 for that period of time, such that I'm charged no payroll, no workers' comp premium while remaining covered and while getting paid. Or my company got the PPP, but we can't do anything. So I'm actually not working, but I'm still getting paid. So I have really no risk. 0012 covers those buckets.
So the recap basically of that is, again, so the 8810, that's where if you have the situation where you've had to disperse your team, people are now changing the activities they're doing, and they're now only performing maybe administrative duties from home, cannot be a mix, is very important. Then it's possible, not every state has actually adopted this, so you need to check within your state to make sure you can, but you'd be able to transition people to an 8810 class code, and that would help reduce your premium amounts. Or if you have a situation, as we've had quite a few people, where they were paying their people just to stay at home because they felt bad for them, or because of, if it was a situation, wages were coming in through FFCRA or these different reasons that you'd pay but not doing any work. 0012 is being suggested to all the states as a way to track those wages without having to increase your premium. Is the
that's right. And there's a good question in the chat from Sarah. We have employees who are paid an hour or so per week, come in, check mail, make sure the office is okay. I heard that their entire 8-hour day will need to be reported on their regular work comp. So if the employee is being paid and they are working, even if it's an hour a day, you can't break it up and say, I'm a clerical employee, 7 hours a day working from home, and I'm, handling something risky for the other hour. You are the riskiest class code is what you're assigned. You can't split the class code. If somebody is really just doing clerical, going in and checking mail, they should be on the 8810. If they weren't previously and they were charged at a higher rate, that's something that we can do. I think it's important to note we have to make changes on our end in order to process this. So it needs to be reported to your agency, to AP Intego, in order to make this effective. A lot of this can also be made effective back to March as well, so that there would be a refund immediately available.
So Mason, real quickly, just in case reading this a different way, just to make sure it's not asking if a person only worked 1 hour doing the clerical stuff, you would only report the 1 hour. You don't have to report an entire 8-hour day, if, in other words, 7 hours that were not worked, correct?
Well, it's whatever the wages are, whatever
Okay.
it's entirely based on whatever the remuneration is.
Okay. Sarah,
so
if
if the
there's
wages
more,
are an 8-hour day.
if there's more to it, Sarah, please just hit it up in the chat and we can follow back up onto that as well. So,
But on this slide, the other thing that Matthew and I wanted to make sure that we got across is that there are a lot of people under real pressure, and our book, it's a staggering number. We just ran it yesterday. We're at 16.9% of our policyholders that have a payroll billing for workers' comp are not running payroll. That's just under 17% of our customers have not run payroll in over a month. You know, it's really sad. It's hard. Now we only a handful of them have called us. A portion of them have called us, over 2,000. But we track all of them, and we're going to get in touch with all of them about when this grace period is over. The grace period essentially says if you can't pay, whether you call the carrier, you call your agency or not, you just will not be canceled for non-payment. If you want to be canceled, you can be canceled. If you started out with an arrears and you are about to be canceled and you go into this grace period, you're still not being canceled. So it's not only like people now, but it's catching anybody and deferring that cancellation until they either settle up at the end of the grace period or don't, and then they start to get canceled. We do that by pushing out the check date in our system. So the important date is we've been pushing out check dates for just about every single carrier till June 15th. And so that's when the notices will start to go out again.
So I took a look at a couple different states, and obviously we couldn't do every single one of them. But some of the changes that we had seen so far, as we kind of discussed, California actually it seems like has been one of the most active or proactive regarding workers' compensation. Depends on which side of the activity you're on as to how you like it or not. But employees on paid leave, they actually have an effective, this new policy basically goes into effect as of March 19th, all the way through 30 days after the stay-at-home order is fully lifted. So what this is talking about is payments made to employees who have been paid but not working for the company, that 0012 code. You can do that for this period of time, that March 19th through up to 30 days after the stay-at-home order has been lifted. Now, what I really found was very interesting is talking about the experience modifier. Now, for those who may not be quite as familiar with it, the experience modifier is it's what your premium is multiplied by, that if you've had a lot of claims, it's going to be a higher, like a 1.1, 1.2, and it kicks up your premium because there's more likely you're going to have another claim. Or if you've had no claims, it can reduce down to like 0.9, which gets you a better rate. California specifically has stated that any COVID-19 claims will not be used against experience modifier calculations. So really, really important for the small business owner. Now, Kentucky is another one. They actually got pretty active pretty quickly onto this one, where they signed an executive order basically entitling frontline workers to temporary total disability payments during the quarantine period, even if the employer ultimately denies liability for the claim. So this is why we start off by talking about those frontline versus first responders. And the intent of this, of course, is to try to protect those people, make sure they're still getting those payments as things are being sussed out. They do state, though, there must be a causal connection between the conditions under which the work is performed. So You can't have not gone to work for 2 weeks and all of a sudden now you have it and then try to push it back onto the business. Like that just wouldn't work, of course. New York. So New York is still in the Senate. They're still working on this part, but creates a presumption that impairment of health caused by COVID was incurred in the performance or discharge of duty. So people that are working, it's expected that if you get sick, it's expected that it could have been from work, and therefore it should actually be covered this way. This is still in the Senate, so we have to see what's going to happen, the state Senate, I should say, as to what they're going to allow or not. Then Utah. Utah, same kind of a concept where it's established presumed date of accident for the first responders. So they established a presumed date of accident for the first responders making the COVID claims, and established an amount of benefits for the first responder who provides first responder services, even for volunteer basis. So this was interesting. So there's actually a gentleman I know, John, is a volunteer firefighter, and this would apply to him as well in that kind of scenario. So we're going to go with our first poll question, if you're ready for that. And while Emily sets that up for us, Mason, we got a little bit more clarification from Sarah. And she was actually asking if 7 hours were spent at home on PTO, paid time off, and 1 hour at the office, they're already an 8810 employee, but can I put the other 7 hours on 0012? Because they've already been doing the
PTO is remuneration. PTO is wage. Like with this situation where an employee is working 1 hour, they're 8810. They're working. And if you have 5 employees, all of them doing this, you'd be better off having 4 of them do nothing and be 0012 and have 1 employee be 8810. But you cannot break up the employee classification. If you can do it once in a payroll cycle. So if they change classes in the middle of the payroll cycle, you can say 8810 up to the change and then 0012 thereafter. But you can't break up the hour. It's 1 employee, 1 classification on that.
So I'm going to try to dive a little. I want to dive a little deeper on that if it's possible, and if tell me no if it's we still wait for more information. From what I'm hearing with that, then when she's saying PTO, I think she's basically saying that, hey, people are home, they're not working, but we're still paying them. It's not like it's vacation time. In that scenario, they would be better off assigning the task to someone else to go pick up that mail for an hour, so they could keep the person completely on 0012 if they were trying to reduce the premium amount, right?
Yeah, another way of doing it.
Okay.
It's like the kitchen example. If somebody spends 3 hours in the kitchen and 2 hours ordering, they're at the higher risk because they're in the kitchen.
Got it. Okay. So 75% got the correct answer, 0012. Of course, us talking about it probably helped as well. So now, Mason, you put together quite a bit of it's very interesting information comparing how the premiums, the different comp premiums have changed over the last 5 years. Can you tell us a little bit about this?
Yeah, our premium is obviously directly correlated to payroll. So each line here is a year, is payroll for a given year by week, and it spikes up and down when obviously the clients who run biweekly, when those guys run. Yeah. So you see a nice progression of growth in every year from left to right, week 1 to week 52 upwards, except this year. The blue line is 2020, and it started out great. And if you look at the table on the right, we were up 15-20%, reflecting new client growth and existing clients having growth within their payroll. So that was very normal. That's just like the last handful of years here. So each year is getting higher. Sadly, the week 13 it started to flatten, and then week 14 we saw a 10% down. So let me just explain that. That is the aggregate payroll in week 14, 2020, right, or premium, was 10% lower than it was in week 14 of 2019. And similarly, it got worse and it went to 20% down, 25, and now 37. It finally settled in at 37 this week. And that means that the effect, I think, of the PPP has been really strong, because I think you would have otherwise seen this number be a lot lower. It's not consistent for every company, and we've shared some data on that. If you look at the sectors here that are being shown, obviously restaurants are shut down. The business services row, this is it's from carriers, they're different industries. In that is a lot of salons and barbershops and other Main Street shops that are shut down. So, those are the numbers you expect. Tech is very resilient. We expect tech to be super resilient. All of us working from home, our companies having to shift to online sales. We think that independent like tech consultants, et cetera, will do quite well actually in this. But just thought we'd share this with you. I think the other takeaway here is that the size of the company does not really matter. The payroll reduction is in the tiniest sort of sole proprietor to the largest companies in our book, and in sharing data with our carriers, same thing in their book. It's driven by industry and by geography, and not by size of company.
So everybody in the audience.
The next one shows, go ahead.
Real quickly, everybody in the audience, I'd love to find out from you, which sectors have you seen, if you have clients across different industries or your business, tell us which sectors you've seen impacted the most yourself. And now you're talking about different regions also, right? So California, you looked at a sample of California.
I mean, there's people in here from regions that are, probably lesser impacted, but yeah, this is California. And, another topic that comes up is rebates. Like, people are driving less, they're getting money back from their personal auto insurer. In workers' comp and payroll billing workers' comp, that rebate has already been realized. We just saw a chart of that. But California has some legislation that would not discriminate and ask us to give an additional refund. And so, all the carriers and agencies are trying to inform them that that's already been done. And so this chart shows a sampling of 215 of our over 15,000 California accounts. And it was a representative sample, and it's what they asked for and what we provided. It shows it's from middle of April, so it doesn't show the deepest declines that we saw in week 18 and 17, but it shows that there's 57 accounts that are actually growing, 44 that are flat. Those are probably propped up by the PPP. And then 53% of the accounts are decreasing in their payroll. So it's this, the whole book is 16.9% down, but it's really driven by what you would think are the COVID affected, maybe didn't get the PPP, maybe they're filing for tax credits. I think it's important to note that there's no bearing on workers' comp premiums if you don't go PPP and you follow the other side of the CARES Act and you go for the tax credits, because wages stay the same. It just allows you to take a deduction against your Social Security, but wages stay the same, so comp stays the same. Anyhow, in here, the 20% of people that aren't running payroll is 100% down, and the rest of it is the whole thing. Anyone impacted is down basically half on their payroll. It's really gut-wrenching. This shows you when people call us. Go ahead.
It'll be interesting to see what those numbers look like and in 2 months from now, when the PPP money starts coming back in. What that's directly tying to, of course, is unemployment. I mean, you may have some people that are still keeping people off. They may not be unemployment, but I'm sure there's going to be a direct trend or a direct pattern that'll mirror unemployment. So,
yeah, I mean, there's 30 million jobless claims out there. That money's coming out of payroll, and part of it is being propped up by PPP. And when that's over, could you see a cliff? Sure. And that's tough to forecast. These are customers that are calling, and there's a customer account ticket. Customers are calling 33% more than they did in quarter one. So overall it's up. It's up on Thursdays because that's when we tell them how much money is going to be pulled out. And that's when they say, hey, we don't have the money, or we're going to stop running payroll, or 8810 or 0012. There was a lot of people asking for certs because they thought they needed that for PPP or, another loan that they're applying for. So just thought it would be useful to benchmark what we're seeing. These are the questions that people are asking, a lot of which we're seeing on this webinar today. These are the situations that they're in. I can't afford it, or I've got people doing different function, not working. I got people on leave. I can't run payroll. I want to be covered. What can you do for me? I need payroll history, and a lot of it is they're calling their payroll company or their accountant. But a lot of people will call us and ask for information because we can help them supplement what they need for a loan. And then we do get this question a lot about the tax credit. Coming back to that, it's, how do I back out payroll for the tax credit? And it doesn't come out of payroll. It's a credit that you get, so you keep money, and that's your benefit, your relief, but it doesn't impact your workers' comp.
So part of the big thing at the moment that's really helping businesses immediately for cash flow has been this grace period timeline you touched base on briefly before, right? So do you mind real quickly touching base on that again of like, how has that been working for businesses starting in March?
Yes. So you would have a company that would otherwise they might still get their billing. The billing is uninterrupted. But if they call us and they say, hey, I'm not running payroll, or I've got a problem, we just push out the next time that we pull money to June 15th. And then up until June 15th, they almost hear nothing. And then at that point, that's when they're going to start to get warning notices. You need to run payroll, generate premium, or you're going to be canceled, or call us about this situation. It's not to say that we can't, as a good agency, help them, and all of our carriers are empathetic, but that's when the carriers are going to start sending these things. And I think the important thing, if somebody's on a direct bill versus payroll billing, we spend all of our time talking about the payroll billing, but if they're on a direct bill, meaning they might be paying on an installment base, or they paid annually in advance, the only time that they ever get a reduction or a refund, would be at the end of the year at their audit. And so if you think about, they've paid, but the exposure amount has gone down, but not on their policy, and they haven't endorsed their policy down, they're actually still overpaying massively for the policy, and they won't get it until, I don't know, if they're owed January 1, they're going to have to wait until February to get their money back. And, that's difficult. So that's actually why we're seeing new businesses. People want payroll billing and they want to switch.
We're going to do a quick polling question, and then we're actually going to dive into an example of exactly what you're talking about. So we'll launch our second poll question here. And this one's a good one to see if you were paying attention a while back. It's been interesting doing the research for this presentation to see how each of the different states are all addressing this. And there's an organization, the NCCI, that on their website, they update every week all of the new legislation that happens per state through a PDF. That's worth just keeping an eye on, especially if you have clients in different states that you're helping, or if you do business in different states as well. So Emily will close that down.
We maintain an FAQ page on our website that people can refer to as well for updates.
Yes, actually, I should have mentioned that before. Your FAQ page at AP Intego, it is really, really impressive. I love the fact they do dating on it as well. So yeah, you guys, everybody got it all correct. California, I'm sure we'll see other states that are going to follow along with that as well. But California has made it to where the experience modifier cannot be, it will not calculate any COVID claims. So this next area, requires a little bit of mathematics, and I tried to kind of lay it out as best I can here. But basically what I've done is I created a fake policy quote. And we took a company pretending it's a painting company with 3 different class codes. Top one being 5474. California happens to have this unique thing where you have dual codes for painting, where if somebody makes more than X amount per hour, then it actually goes to a different code. But the concept's still the same. If you're looking at a quote, you have your 3 classes, the premium rate, and the estimated annual wages. So if I go through and I figure out at each one of these what our total wages would be, and so the total premium for those wages, we've got $12,186.35. Now, most policies are going to have an expense constant, which is just basically a fee that helps them process the whole thing through. And then there's that experience modifier that we were talking about before. That could be a 0.9, which would actually be a reduction, or a 1.1 as it is here, and was an increase. In that scenario, that means we had a total policy premium of $13,654.99. Now, we start off by doing this because I wanted to show the variations between a direct billing, and then we're going to show you like a pay-as-you-go and how it impacts cash flow. Most direct billing programs usually have something like a 25% down. So if we set this up to where if the policy renewed in January, well, that means in January you put down $3,400 as your beginning portion of it, and then you'd have equal payments for the remainder of the months. As that adds up, you then have your $13,655 basically. But if we look at the same type of scenario, and let's evaluate a direct billing in comparison to a pay-as-you-go. Now, the chart on the left-hand side, we took the exact same numbers we had for the direct billing, but if you had a pay-as-you-go system, you don't have that immediate down payment that you have to do. And let's go off the assumption that we know in painting that November, December, January, February are our slower months. So we're saying 5% of the estimated labor for the whole year would have been used. So of course this equals 100%. Now my intention of showing that is, if you look at the cash flow difference this would have caused, January, 3,400 versus 682. That means a pay-as-you-go client would have had an extra $2,700 still in the bank account at that time. February, the difference combined together, by the time you made these 2 payments, you now have an extra $3,200 almost in the account. And you can see as it starts to switch over and then zeroes back out by the end of the year. Now, all of that is considered like the pre-COVID world. So if everything just went along, we never had anything happen, that's what it would look like. But let's do an adjustment. Let's take a look now if you had the pay-as-you-go with a COVID adjustment. January, February, hey, everything's going along like normal, no big deal. March, all of a sudden, you're not working. There's nothing going on. So we take that 10% and we drop to 1%. Since this is on a pay-as-you-go and there's no wages being earned, now you're starting to see where we're starting to drop down. And in this scenario, expecting we'd build up just a little bit at a time, we now had a reduction over the entire year of time of roughly $8,800, $8,900. Now, the reason I pointed out that way is on a direct billing, most standard direct billings, what would happen is you would keep paying, and it's not until you do your audit again, which would have been the following January, that you would true up and be able to get money to come back because you would have overpaid. So what the benefit of doing this is you do have the ability during different times of the year that you can actually check if you're on direct billing, you could get switched over to a pay-as-you-go, and you can actually request, as we'll show you how in just a bit, the ability to switch over to do an AP Intego pay-as-you-go workers' comp through QuickBooks Online Payroll. Now this last slide, what I was showing here is what if we had all the exact same wages for everybody, but we reclassed people. So we took our painting from 120,000 and it went down to 90. And then we took our other painting from 80 to 60, and we moved all of that into that 8810. So nobody dropped any type of, they're still making money, they're still doing something, but we're just moving into that clerical because they're taking tests, doing administrative, whatever it may be. In that type of scenario, you can see that what would have happened there is we would have had a reduction again of about $3,300, as just kind of proving out where the math is onto it here. So those class changes, it's another way to look at how to save the small business owner's money, keeping that cash in the bank so they can stretch it even further. So hopefully, if you've got any questions on that, please put it into the chat box, of course. The goal here is to try to show how you can really utilize some of these new changes to put dollars back in the bank. So now we're going to go to our third poll question. This should be a pretty easy one. Mason, are you taking polls on your side too?
I am.
Okay.
I hope I don't get them wrong.
Now, Mason, being the guy behind the scenes that does all of is familiar with the way the policies are set up, is there anything you would have added to like the way those calculations were being represented?
Hey, you got that right.
Okay.
No, I think you got it right. I think that the key is to make it fluid, to allow the business to pay for the coverage that it needs in real time. And we're actually working on this for general liability as well. I think we'll be one of the first movers to come out with that. The cash flow benefits should really apply. And I think in a post-COVID world, we'll have products beyond workers' comp for it. It'll function a little bit differently, but businesses should pay for what they need when they need it.
Now, I was a little surprised when I first saw exactly how many of the companies that AP Intego works with. So, what is it, 20 plus, or tell us about your coverages you guys do.
Yeah, and then each of them has different companies, and Hartford has 11 companies in California. So whenever we quote, we're actually quoting 11 companies when we quote the Hartford. So, it's really like 75 different companies that we quote, and we place people with a state fund if they need to. If they're not eligible for a standard market. We write with everyone who does payroll, billing, workers' comp, but most of our customers go, obviously price really matters. But in today's world, during a crisis, between crisis, we always talk about, hey, don't forget, if one hits, you want to be with the best, and the best are really with Hartford and Travelers, for instance. And so we've seen more new clients go that way, but we generally look at the financial health of those companies, how they've handled a crisis in the past, but really how they handle every single day. So we constantly ask for customer satisfaction feedback, and then we filter that by carrier. And when they don't like us and they're with a certain carrier, we don't put new business with that carrier, because it's a reflection on that carrier's service through us or to them. So the key is, though, that across those 400 payroll and point of sale and payment partnerships, we have 162. It's just now actually ticked over 163 million in premium. It's growing. It has a good loss ratio. We have a lot of leverage. We're writing new business. Nobody else really is. So we actually have a lot of leverage, and that's really what brings the whole ecosystem of Intuit and all the other partnerships together to drive benefit and get these kind of grace periods that aren't necessarily out there for everybody.
Now, we're going to show, obviously, real quickly on the QuickBooks Online aspect of how you can do these request to quote, everything else, but AP Intego works across numerous platforms. It doesn't have to, you don't have to specifically be with QuickBooks Online to do this, correct?
Correct. There's multiple QuickBooks payroll products. There's multiple QuickBooks products. There's, people that are outside of the Intuit ecosystem. There's lots of ways.
So now what I wanted to be able to show is within QuickBooks Online itself, our firm, we always try to set up QuickBooks Online with QuickBooks Online payroll, which makes it nice and easy. And we bring new clients on. We love to set up the workers' comp that way. It just makes the whole process easier, especially the audit process as well. But let's say you already have a policy with an existing company, something outside of it. You can still go in and request a look at your policy. You can either try to connect your policy or get a quote. And it's really easy to do it. You go into your workers field, you go for workers' comp, and you'd be able to basically choose either get a quote or connect my policy. When going through this part of the process, if you're trying to connect your existing policy, you're going to go and tell the insurance carrier what the expiration date is and the type of payment method, and that has to do with whether it's pay-as-you-go or direct billing. Now, the reason for this is, with workers' comp insurance, there's specific times where you can review, and when you're getting ready to renew a policy, you can switch providers, and this helps kind of establish that. There's also a point where usually, I believe it's about halfway through the policy with certain providers, you have the ability to also take a review, and you could evaluate and see if you could switch. That's really important right now more than ever, because what if we painted this picture of a January renewal? What if your renewal is in June? What if it's July, right? And if you're on a direct billing and you have to put all this, you have to have all this money to put down on a direct billing policy, this is another way that you can improve the quality of your workers' comp billing and avoid having to have the cash to put down on some type of a direct billing setup onto it. As we progress forward, so as you basically put the information in, you get 1 of 3 results. It's either going to tell you basically, great news, you can connect your policy, and the existing policy will get connected. Agent will actually reach out to you. I was doing a presentation on something very similar to this with Linda a couple months back, and we actually went through to actually do a quote request. The person literally called back so quick that it interrupted the presentation with a phone call coming through. So, I mean, they're very, very responsive. It's pretty great. The alternative, of course, is existing policy isn't eligible to be connected, but they can get back to you when it gets closer to that renewal date is one other option. And then the third, of course, is there's a short period of time that you can do that transfer. So it would kind of give you an idea of when that transfer would be possible. That has to do with that, again, about 2 months before when your policy would conclude, you can start to kind of shop. And you really should be looking at that stuff every year. It's really important. Make sure you're getting a good experience modifier. You're getting the best rates possible. As you go through, if you were actually requesting a quote instead of just trying to connect your other one, this is what that would look like instead. So the other workflow. It's going to ask you about the type of business that you have. I'm sorry, your industry, and then the type of business. And they actually tie off of each other. So service provider then goes to accountant, and then your SIC code. And then it's going to ask you what year the business was started, as well as the type of business entity that you are. From that point, the nice thing is when you have it tied in with payroll, it actually will pull the employees up. And if you've already provided class codes, it would suggest those, but it gives you drop-down capability to choose what would be the right class code. Now, if you're going through this route, if you're not certain what's the right class code, I strongly suggest ask, I'm not sure, let an agent help, because you don't want to misclassify anything. That will make sure you get the right quote the right way. The role which it asks for has to do with like ownership and whether a person should be included or excluded from the policy. And some of these things vary state to state. So this is the generic overview of it, but you'll want to find out what's the best for your environment. They of course also ask you your estimated annual payroll, and then the payroll frequency as well. It's really, really easy to go through it. Last couple of bits of questions that they also have inside of here, they want to find out about your business, whether you already, if you currently have workers' comp, if you've had prior claims, if you're a staffing agency, if you have more than 50 employees, or if you arrange delivery of goods and services, which that's one I've never quite understood, but maybe you can tell us a little bit more about it. And then Amy, you were asking, where is this in QBO? So if you were to click on the workers tab on the left-hand side, like you're going to employees for payroll or something, you'll then see a top toolbar or top bar that then says workers comp, and you'd be able to select it from that. So once you've gone through and you've actually requested the code, same idea, 3 different results. One of them is going to be pending review agent, where a licensed agent is going to review the quote and get back to you, again, super, super quick. Another option would be additional details are required. There are certain scenarios, different states that require certain ways that just requires an agent to be involved. Or the third one, which is the best, is the policy gets approved. So if somebody doesn't even have a policy, they could go through this way right away, gets it set up, gives you actually a whole write-up of what's covered under it, has you sign it, and you're rock and roll and ready to go. Super easy. And so as we
So
get
Matthew,
close,
before we move on, there's in the Q&A box, do you need to be using payroll in QBO to use the workers' comp features and connect your policy?
so great question. The answer is if you wish it to be fully automated, where it's directly reporting, then it's a better experience if you're using QBO payroll as well. However, should you transition for some reason, you can still use the AP Intego platform. You would just have to then log into their platform to provide or to report the payroll numbers at that point, because you've taken the automation portion of it out of there. So it can be done either way, but definitely better.
Self-reporting.
Yeah.
It's definitely not as smooth a process for you, but it's possible.
Yeah. As a time-sensitive accountant, I love and live by the ability to have it all in one place and just clicking and not submitting reports or any of that type of stuff anymore. So we got our last poll question up here. And hopefully I made that one a little bit harder. We would love any other questions, the reason we've got Mason on here as well is Mason's been really involved with tracking all the legislation that's going on around workers' compensation. He's extremely knowledgeable about it all. What other questions do you guys have around workers' comp and how we can try to help business owners keep dollars in their pockets a little longer through these times? Please feel free to ask them either through Q&A or through chat. Zap the payroll. Sarah, that's interesting. So Sarah was asking zap the payroll. You can't zap, they don't have, I think you're talking about Zapier, and there's not a Zapier integration at this time, but it could be a good suggestion. We'll have to talk to the company about that. That's a good idea. She says get more.
Yeah.
So recap of this stuff as people bring in other questions. There's a couple of primary things. Different class codes in the works. 8810, the ability to take employees classified as something else, one-time change, move them over to administrative, so any wages they're being paid for work they're doing at home, and it must be, you can't put them under that and then have them go build a new wall or something. It doesn't work that way. It must be administrative. You can do that. You could reduce the premiums that have to be paid out, especially as pay-as-you-go, for the different classification. If you have employees that you were paying to sit at home and do nothing because you're just an amazing owner, or if they were unable to work, look into the viability if you can use that 0012 class code in your state, which would give you the ability to track those wages at a 0% premium rate. So that, again, you're not paying extra onto it. It does vary state to state. We're seeing new legislature through all the different states all the time. Stay in touch. You can reach out to AP Intego. Their FAQ page truly is amazing. I love the fact that every time they add questions or answers, they date them as well. It's so important right now that they're doing that. And then there's a major difference when it comes to your direct billing policies versus your pay-as-you-go, and you're not stuck in a direct billing if you are right now. It's a major way you can get money back or keep money in the account for them. By requesting a quote, you can see if it's necessary to get a broker of record change. They can evaluate and tell you how soon you could do a change of that nature to potentially reduce your monthly premium right away. Did I miss anything on that, Mason?
I think the only thing we really haven't talked about is what everyone thinks about in terms of rates. Right now, California withdrew its mid-year review, keeping rates flat. They've been dropping at a decreasing rate, but that's been good for the insured. If there are a lot of claims, even in other sectors, the same companies write other lines of business. Mm-hmm. The 1-1 filings, could be there. I asked the head of work comp at Hartford last night, what to tell you guys. His reaction was they don't expect, because of the experience mod point that you brought up earlier, Matthew, because of the fact that there just is not likely to be a legislative change. They do not expect a big change. They don't expect a hard market, meaning raising rates. So it would seem to me like next year, right now, unless this crisis and economic shutdown lasts a lot longer, cuts a lot deeper, they would expect to see a benign flat rate environment next year.
Beautiful. What's the best way for people to connect you? I kind of put some basic details up here for you.
Yeah, that's our company. I'm mpower at apintego.com.
Okay. Beautiful. So, and they can reach out, you know,
really
questions, so forth.
Really appreciate everyone's time. Absolutely happy to handle it. Great questions today.
And for myself, my contact information, again, you've got it up on the slide here. One of the best ways to really reach out to me is actually through our Facebook group. It's QB Community Live. It's a group that's made up of small business owners, bookkeepers, accountants, tax professionals, all based around the fundamental of together we all succeed. So I've got that with my cohort, Linda Artisani. So if you got questions, reach out there, or you can pick up the phone call. I always prefer a phone call actually over an email, but either one will still get to me, of course. So awesome. Mason, on that note, thank you very much for your time today, and just wishing everybody a very successful week.
Thank you,
Stay safe,
Matthew.
everyone. Thank you.
Thank you, Matthew. Thank you, Mason. Thank you, everybody, for being here with us today. Here shortly, I'll get the webinar recording and the handout to everybody. And I hope to see you all at the next Insightful Accountant webinar. Have a good day.